He did. All right, I'm going to move now to the domestic front. The tax reform debate seems to take one step forward and 5 steps back as the government promises much but so far has delivered very little in the lead up to the coming election. The business community has openly expressed its disappointment Malcolm Turnbull backed away and has dumped a rise in the GST to 15% for the moment. The Business Council of Australia is still pursuing the case for broad-based, genuine tax reform. President Catherine Livingstone launched a new proposal for real tax reform 2 days ago. And joining me now is Jennifer Westacott, the Chief Executive of the Business Council of Australia from our Melbourne studio. Jennifer Westacott, thanks for joining us.
Thanks, Helen.
Now, the BCA has been pushing for this whole package of genuine tax reform pretty much since the 2013 election, which included a rise in the GST as well as cuts to corporate and income tax rates. Now you've been forced to launch a kind of a proposal Mark II because the GST is off the table.
Well, that's right. What we tried to do this week was a few things. Firstly, to remind everyone why we needed to do tax reform, and it goes to the conversation you were just having with Kate, which is we've got sort of slow growth and we've got to get that growth to accelerate. So tax reform, which influences the behaviour of businesses and individuals, is about economic growth. And we tried to say, well, if the GST is off the table, then what are other ways that we can, of course, prioritise cutting business taxes, company taxes, cutting income tax so that we can get that growth going again. And we've tried to sort of nominate a way through, 3 stages, a more pragmatic approach. I mean, clearly the GST offered a way of doing tax reform more comprehensively and faster, but that's not where either the government or the opposition is inclined to go. So we've tried to go and say, well, OK, what's a practical way that we can still get the same result, albeit over a longer period of time, cuts to company taxes and cuts to income tax.
How disappointed are your members, apart from other business groups, that the GST was wiped away?
Well, we would have liked to have seen, obviously, a green paper or at least some kind of paper that looked at the options and really took the community through the benefits that a GST might have had in allowing us to accelerate reductions to company tax, reductions to income tax. And, of course, there's a very important structural point to the GST. And it's all the things you've just been talking about. As our economy moves to a services economy, as production chains and supply chains around the world fragment, the kind of move from direct taxation to indirect taxation is going to be a very important structural change to the economy. We think that needed a bit more of an airing, but look, Helen, we are where we are.
All right,
what we've tried to do this week is to kind of get us back on track.
Jennifer, why couldn't your organisation, you're meant to be, you know, fairly close to government, why couldn't you convince the Treasurer and the Prime Minister of the merits of a GST?
Well, look, I think the first thing to say is that the tax reform was never about the GST. I mean, it was always about what do you need to do, which is to kind of grow the economy by lowering income tax, by lowering company taxes. And of course the GST was a funding option there. Look, the government was not convinced by the compensation. It was not convinced that the growth dividend was there. We argued very strongly that you needed to look at the growth dividend that came from a corporate tax reduction, not just from personal income taxes. Look, I think these things are, you know, it did not help, of course, having the Labor Party run a scare campaign. But look, what we've tried to do this week is to say, well, you know, if the government has made that call, let's now see how we can make sure that we continue to get tax reform headed in the right direction and not have a daily debate about lots and lots of individual taxes, but keep our eyes focused on what's the prize here, which is to kind of get economic growth going.
All right, but you are still pushing for a corporate tax cut. How can it be best paid for now?
Well, we've put forward a series of ideas, and some of those ideas are being aired by other groups, and it's obviously up to Treasury to do some of the modelling here. But, you know, there are kind of some concessional or tax provision arrangements that can be looked at. Obviously, there's a debate about superannuation, there's a debate about negative gearing, there's a debate about capital gains discounts. You know, both political parties are committed to cracking down on multinational tax evasion. That is obviously going to generate additional revenue, although the Tax Commissioner, I think, has very helpfully cleared up how much money is actually involved in that, where he says it's sort of less than $1 billion. We can simplify and streamline FBT. So there are a range of things. Now, they're not going to get you there fast enough, But they will, I think, if directed to the right areas, start to kind of get the tax system restructured in the right direction. And one of the things we've said is what we want to see on the corporate tax side is a commitment to getting to 25%, which will only take us to the OECD average, but maybe do that in 2 stages by firstly correcting the anomaly that was put into last year's budget, where you've got this kind of different tax rate applying to small companies and big companies, so going to 28.5% straight away.
All right, now you would concede, no doubt, that it looks like there are signals that the government would like to make small cuts to personal income tax rates long before they give a cut to company tax.
Well, I think you've got to, again, keep going back to what's the point of tax reform. The point of tax reform is to get economic growth growing faster. The best way of doing that is to reduce the corporate rate. So we argue in our package that you've got to do both things. You've got to, on the personal income tax side, tackle bracket creep and tackle the people who go in first. And then on the corporate rate, you've got to at least adjust initially for this anomaly that's been created between big and small business. So
all right,
our package that we released this week.
Sorry, I was just going to say, how do you've just made a fairly big statement to say the best way to get economic growth is to cut corporate tax rate. Now, the average person sitting at home
says, in tax reform.
Yeah, I know, but they say, well, how does it do that? I mean, how do you explain to the general public why a cut in company tax will ensure that there's the creation of jobs and that that cut won't just go to the profit bottom lines?
Because what companies do when they have freer cash flows is they invest. I mean, we talk about innovation. To get innovation to occur, companies have to have the capacity to invest, be they big or small. Companies have to have the capacity to put on new equipment so that they can do things more productively, so that they can either, put on more people or expand their operation or pay their workers higher wages. I mean, the wages issue is a big issue as well, Helen, because we've got, the lowest wage growth we've had for a very long time. So what does tax have to do with that? The corporate rate influences massively the decisions that companies make at the margin about what they're going to invest in, and making those investments to expand, to do things more productively, to increase their efficiency, which allows them to put on more people or pay people higher wages. I mean, this is not contested by and large by most economists. If we look at
I know, but
other
it's
countries around the
explaining
world,
that to the community. And I mean, the BCA
Sure.
and other business groups have been pretty roundly criticised by several in the political world for a kind of a lack of effectively prosecuting a case to the public or to convince government.
Well, look, our argument is a pretty simple one. If you want jobs, if you want economic growth, it's business that drives jobs, it's business that generates economic activity. And if you can control, many things outside of government's control, the one thing that governments can control in respect of tax is the rate of taxation. It influences the sorts of decisions that companies make, whether they expand, whether they get on new equipment, whether they do things more efficiently, whether they export more to overseas markets. Our rate, which is very uncompetitive, is actually holding us back in the sort of transition you've just talked about that's happening in our economy and in economies like New Zealand.
How do you get over the criticism that why would you hand a tax cut to foreign shareholders and to foreign companies, many of whom are seen to be paying little or no tax in this country?
Well, I think you've got to separate these two issues, and there's a few issues here. So the first is this issue about multinational tax evasion. Now, we have got to tackle that.
Nail it, yeah.
But we've also got to be very, very... Sorry?
Nail it, yes.
Well, we have to, but we've got to do that in a way that's very careful, because we want foreign investment in this country. Foreign investment, it's been one of the kind of hallmarks of our economic growth, and we need it. We need it to create jobs. We need it to expand the economy. But there is absolutely no doubt that we should take action to crack down on tax evasion. Now, we've just also got to remember our starting position. Australia has some of the highest integrity rules in the world. There's a process going on in the OECD. Australia is at or near or better than most of the things that are being recommended. We've also got to implement the government's recent legislative changes about country-by-country reporting. The Board of Taxation has recently launched a tax transparency code. We're strongly urging our companies to sign up to that code.
Yep.
And we've also got to get the multinational tax stuff into perspective. As I said, the Tax Commissioner recently in front of the Estimates Committee was asked, do you need different laws? He said no. He was asked what did he think was the dollars at stake, and he said less than $1 billion. So let's do it, let's get on with the compliance, but let's not confuse the fact that across the vast majority of businesses the rate is uncompetitive way compared to Asia and of course compared to our OECD countries. If we want to be competitive in this economy that's under enormous transition, if we want small companies and start-up companies to become big companies, our rate of corporate taxation is too high and it's holding us back.
All right, now they're the economic arguments, but I mean, are you concerned on the political side that the Turnbull-Morrison team is going to go very minimal on tax reform for this election? They won't bite the bullet on the sort of reform you want because perhaps politically it's too hard, but also because they intend to run a strong scare campaign against Labor's negative gearing changes, etc.
Well, I think you know, I'll leave the politics to the two political parties, but I've recently done with other people these things called virtual town halls, and we've had thousands of people on the call. People understand, Helen, that in order for us to grow the economy, we need businesses to be investing. They know that. They get that. They also know about bracket creep, when inflation or people moving into higher tax brackets hits them with a pretty high tax hit straight away. They talk about that. They talk about, I've got an extra job, I'm working a few extra hours. We've got to make sure that in talking to the community about reforming our tax system, we don't lose sight of what we're trying to do here. We're trying to grow our economy by getting the incentives for people and the incentives for business right. We are not trying to increase the level of taxation to spend more money. We've got to make sure that both political parties going into an election don't get sidetracked on a tax-by-tax debate, don't lose sight of the purpose of tax reform, which is to grow the economy.
All right, Jennifer Westacott, it's great to have you on and hear you talk about those views again. Thanks very much for joining us.
You're very welcome. Thanks, Helen.